Stocks fell on Friday as traders and investors continued to digest a slew of mixed economic data and the implications for monetary policy. The S&P 500 dropped for the second week in a row after a new report showed consumer sentiment missed estimates in early September and held near a decade low as concerns over inflation lingered. And both the Dow and Nasdaq also ended lower by the end of Friday's session. This week we experienced the usual avalanche of debt ceiling fearmongering. And here's my bet. All of the jawboning will end 1 second before the deadline when the best of all agreements will magically and suddenly be found. But has anything changed anyway? We have rates near zero, record inflows into the market, the Fed is still pumping billions, and Biden wants to go on a spending spree. And of course we have the anxiety ahead of next week's FOMC meeting, which did not help dip buyers save the stocks for this week. And in other news, with the latest proposed tax changes from the House Ways and Means Committee, the big question now is how do you define who's wealthy? Well, that's one trap if I've ever seen one. Apparently, a wealthy individual is someone who earns $400,000 a year or more. As for me, I just want to be rich enough to be referred to as eccentric instead of just crazy. Well, it's time to take a look at the charts. And today we're going to take a look at one chart, and this is the 1 year daily chart on the spiders, the SPY, and we're taking a look at 1 year for a little bit more context. And the close on Friday was 441.40, and the context I'm talking about is right now we're sitting right on that 50 EMA. Last week we talked about perhaps some red flags or cautionary flags coming out if we did pierce below that 50 EMA, and we ended right at it. So we'll have to wait into next week to see what happens. What I'm looking for is perhaps maybe we do go through as we did there in early March, and that wasn't much of a problem. It has a lot of similarities to what we're experiencing right now, a couple of weeks of sell-off, pretty much what we have here. We haven't gone through that 50 EMA, but let's watch into next week. Here in the volume, we can see a bit of a kick up in the volume, not unlike we've done before, perhaps again from that, say, mid-February, early March time frame. Moving on down into the MAC, you can see that we're still above zero, but there's a good separation between the fast and slow lines here, and that separation means that anything goes. We can continue on down, or perhaps next week we can start to bottom and base, but there's a lot on our plate economically into next week. Hopefully we do bottom and base as we did in that March time frame, but if we went below, I don't think that's going to be anything seriously negative. Into the histogram, a very balanced market with the cycles moving up and down, up and below that zero line, and it looks fine. Into the price rate of change, pretty much the same thing. We're staying above that zero line for the most part. We've come through a couple of times there in the mid-May, there in that early March time frame, and it wasn't much of a problem, so I don't anticipate anything more serious, at least yet. Relative strength, same thing there. We're coming on down. This is probably about 30, being at the 32.88. Going down to the 30 won't be a problem. We've done that several times. Into stochastics, much the same. We are a little bit further down than we had been in that, say, early March period as well as that May period. Perhaps going back to November a while ago, you can see where we were then. That was a pretty good downdraft, but I don't think we're going to experience that yet. At least I don't see it in the charts at this point in time. These oscillators may move down as they are. You can see we're down here once, twice, a couple of times there in September. We only hit that bottom once in October, and that was actually a much worse downdraft than we have now. But we'll have to wait and see into next week. Back on up to the price chart, and one last look. All I'm saying is continue to save some cash for a rainy day. And for today, that's ChewDog Charts. Thank you.